Whatever you read in the newspapers or in those headlines, today's data from the inflation perspective was not good news. It's Wednesday, August the 26th, and this is Markets with Megan. If you like this podcast, subscribe, hit the alarm bell, share it with your friends, family, colleagues, anybody who's interested in the economic data that we get on a regular basis and what it means for the markets. Today, we're going to focus on the inflation data that we received. We did get some information on durable goods, which were relatively strong, much better than expected, but we're going to focus on that personal income and spending report that also includes the inflation data. So let's dig in. For the month of July, personal spending did slow a little bit, and that this could be attributed to what we also saw with retail sales, where Prime Day was actually pushed into the month of June as opposed to July. Because income rose a little bit more than spending, we did see that the savings rate actually increased to 3%. We were running very, very low, below 3% for the prior 3 months. And even though it got to 3%, I just want to put that in perspective. In the average savings rate prior to COVID, and that created a big discrepancy in the average rate over time because the savings rate jumped up so much. But the average savings rate before COVID was typically between 7 and 8%. We're looking at a 3% savings rate. This is showing just that inflation continues to have and to be a problem for consumers. They're digging into their savings and they're also using credit cards. So when we look at the actual inflation data that came out of this report, this is the PCE inflation data, and this is the Fed's preferred inflation gauge. At least it has historically. We know that the new Fed chairman is looking at some other measures, but this has really been what chairmen have focused on. We saw that at the headline level on a month-over-month basis, the expectation was for it to only rise 0.1% after it declined in the prior month. It actually rose 0.2%. It rose 0.2% as well at the core level, and that's after just a 1/10 increase the prior month. So it may seem tame, and that's what you might read in the headlines, but we have to remember that this inflation situation is not going away. On a year-over-year basis, that core PCE data that's supposed to be around that 2% target is now 3.3%. Didn't get any worse than the prior month, but the point is it's not getting any better. There is a job the Fed needs to do, and it's not getting done. This week, we will get the Federal Reserve Chairman will speak at Jackson Hole, so the market's going to be paying a lot of attention to that because of this inflation data. There's some other indicators in this inflation that we like to look at that just really highlight the problem that we have with inflation. We look at this what's called the super core, and that takes services where the amount of money that Americans spend is typically in the service sector, but you strip out things like energy and housing that can be very volatile. That super core is rising 3.9% on a year-over-year basis, and it's been hovering around this 3.9% level for quite some time. So this is not good news for the Fed. I don't care what any news articles say about this. This is not good news. The Fed has to do their job. Right now, it's a 40% chance that the Fed will raise interest rates in September. I think that's crazy after the data that we've seen. It's a 55% chance in October, but I think we'll have to just wait and see what the chairman says on Friday. They cannot take any dovish tone in any of the rhetoric going forward. The market's going to lose that long end of the curve because the concern that the market has is that we don't have our handle on inflation. That's all we have today. Tomorrow, there is some more information that we'll get on advanced goods and retail inventories. But really, Friday, we'll be back with some additional information on consumer confidence. That's all we have today. If you have if you want to see a history of our podcast, go to marketswithmegan.fm. Thank you.